Good day. So today we are going to look at autonomous branches. So in my introduction, I said that autonomous branches, these are branches that are independent. So it means that they can prepare their own set of books, their own set of accounting books. So meaning they can have an accountant. Now, when it comes to the autonomous branches, we are going to see whereby the head office is going to prepare a special accounting book or account called the branch current account, and then we are going to look at the branch preparing the head office current account. So it means that here the head office is going to prepare the branch current account, and then the branch is going to prepare the head office current account. Now, the relationship between these two accounts is that the branch current account is that of the debtor and supplier. So in simple terms, we are preparing the debtor's account and then the supplier's account or the creditor's account. Now, because it's a debtor supplier, it means the head office is going to look at the branch as the debtor, because remember, the head office is providing goods, and then later on the branch has to remit the cash. So it's like the head office is looking at the branch as the debtor, whereby the head office is going to send the goods and then payment will be made later. So it's a relationship of the debtor supplier or debtor creditor. So meaning, because this is the debtor, so our balance brought down will be the debit side, like this, and then automatically that makes our balance carried down on the credit side. So these two figures should be the same, because the balance, the opening balance here in the debtor's account should be the same balance here, because these are two accounts which are opposite, because a transaction that happens in this account should also happen in the same account. Otherwise, we cannot have two balance brought down and another balance carried down here. Then, if there are any goods that are sent, remember it's the head office which is preparing this account. And so because the head office is preparing this account, once that head office sends goods, those goods sent will be debited here. So for them to record the goods sent, obviously because it's the head office that is sending the goods. So once they send those goods, they're going to come and debit it here to show that the amount of money that they're demanding these people is actually increasing. Now, once those goods now come to the branch are going to receive those goods. So for them, they become goods received. So for them, they will become goods received like this. So it means that these transactions are the same transaction but opposite in nature. So once goods are received here, first you're going to come and credit this account to show that the liability these people are demanding us is actually increasing. That's the same way how the money people are demanding us is also increasing. Now, when there's cash remitted back to the head office, it means that we are going to come and say cash sent. So once these people send the cash, they show that the liability that is being demanded of them is actually reducing. And also here they're supposed to come and say cash received to show that the amount of money that has been demanded of them is actually also reducing. Now, once you balance off these accounts and have like this, obviously since this is an asset account, the debtor's account, balance carried down will be on this side. And therefore for this, our balance carried down will be here. Now, these two figures, the balance carried down here, should be the same. Because ideally, if we have the balance brought down of 400, and this side also balance brought down, also of 400, it means that we are the two opening balances. Then I assume that there are some goods that were sent, which were what? 600, and then this side 600 was received as goods. So that means if they had opening balance of 400, now the goods that were sent were 600, and this one received the goods of 600, then if this they send back the cash of 300. So meaning that this is 1,300, the balance carried down will be 700 here. Now the same applies this side. This 1,300, balance carried down will be 700. So it means that the balance carried downs for the branch current account and then for the head office current account are the same or should be the same. But that's not always the case. So you're going to find out that there is a difference in these figures. Instead of finding 700 here, you might find 500 as balance carried down. Now, if you ever find out that there is a difference between the balances of the branch current account and then the head office current account, then we're supposed to make a reconciliation. Now, that reconciliation is going to be brought about, that the difference in the two is going to be brought about by what we call items in transit. Now, I assume that these people, when they were selling, they sent goods of 600, okay? But then these ones only received goods of 400. Now, if they only received goods of 400, and maybe also the cash that was sent was 300, and then these ones received only 100. So meaning that once we are balancing off here, this will be 800, 300. So our balance carried down will be 500 here. Then this side, you're going to have 1,100. Our balance carried down will be 900. So that means there's a difference of 400. There's a difference of 400. That's why these accounts are not balancing up. And if you check the difference, the difference is that they sent the goods that they sent here, they were 600, okay, but they only received 400, meaning they are goods in transit of 200. Then also the cash that was sent was 300, but for them they only received 100, meaning there's also cash in transit of 200. Now, this 200 plus 200 is going to give you 400, which is the difference between 900 and 500. So, meaning that we are supposed to make a reconciliation so that we can make these accounts to balance. So how do we make the reconciliation? The reconciliation is going to be, the double entry is debit, items in transit, and then we are going to credit the branch current account. So this is the way we're going to reconcile. So it's all about having this journal entry that once we are doing a reconciliation, we are going to debit items in transit, and then we're going to credit the branch current account. So any number that is concerned with the autonomous branches, and then we have branch current account and head office current account with different figures, we're supposed to first begin by us doing a reconciliation. So this is what we're going to be looking at in this question. So I'm going to do a format in my next video concerning autonomous branches, and then we shall solve a number eventually. So thank you so much for watching. This is Kevin Davis Accounting. Until we meet again, it's a bye for now.